the best place to be is probably in the gold trade. The junior silver stocks are widely reviled. The commodity that I have the biggest position in that affords me the biggest risk in the near term is probably oil and gas. You've chosen wisely if you've invested, I would say, on montage. The uranium business, I think, is going to be very good in the United States. And I also want to say, and I will give you a couple names. You don't have to be in the Francos and the Agnicos if you're willing to do the work. There are some extremely high quality juniors. There's an arbitrage in place now in uranium between the cost of capital and the return on capital employed that's off market.
Thank you for watching Resource Talks. My name is Antonio, and with me today is Rick Rule, which means that I've already been talking for too long as is. And although I do like the sound of my own voice, at times a bit too much, Rick, I also like the sound of your voice, and particularly when that voice is giving me your predictions for the next year. So I want to hear what companies you're looking to get into, maybe what companies you're looking to get out of, and what you think some of us are getting wrong when looking at the markets. But let's maybe start here. What commodity is your most contrarian bet going into 2025?
This year's been pretty kind to me, Antonio. And I'm anticipating, for whatever reason, a gut feeling that next year will be a little less generous.
Hmm.
So I'm doing a couple things. Where the market has been too generous to me, I'm taking some money off the table. I'm doing some selling. Where I've made mistakes, I'm selling ruthlessly to book the tax loss so that I get to keep some of the money that I made in decisions that were good to me. I would say, on a risk versus reward basis, that the best place to be is probably in the gold trade. It's unusual, from my point of view, to find high quality gold companies, irrespective of market cap, that is to say, the best of the best or the best of the juniors, priced reasonably. And I see them being priced reasonably. I'm not trying to say that the biggest gains that you can harvest will be in the gold sector, but if you juxtapose risk to reward, and if you look at the valuations of the good companies in the sector relative to their historic norms, when I say price versus value, I'm really talking about enterprise value versus net present value. That sector seems attractive to me. The sector, too, has, pardon the pun, but lost its luster. The US dollar has been quite strong post Trump's election, and there seems to be euphoria in the United States that the Department of Government Efficiency, led by a person who became a billionaire on subsidies, is going to do some spectacular job reducing the size of the US government. I think that's utter fiction. I don't think that we'll run out of that perception anytime soon, which is to say, I don't think that you're going to see a panic into gold anytime soon. But I do think that the overall arithmetic of the maintenance of purchasing power in the US dollar is going to continue is silly. I think the dollar will do well compared to other basket case currencies, your own included. I think the dollar will do well against the euro. I think it'll do well against the Swiss franc. I do think it'll do well against the British pound, the Canadian dollar, the Australian dollar, all of that. I don't think that we will maintain purchasing power in the US dollar. And as a consequence of that, I think the gold trade, on the basis risk to reward, is the best trade I see.
What are you selling, though? You started it off by kind of teasing me on selling. What have you been selling?
Well, I've had some juniors in particular that have done too well, I think. They're beginning to be priced for perfection. And I don't want to name any names because they're old friends. But I had circumstances where I owned the stock because I thought I'd see 150% return, in 2 or 3 years. And I've seen that return in 2 years. And when a stock meets my target, and where I see it at a premium when I say a premium, when I see the enterprise value of the company being 160 or 170% of uh, what I consider to be its net present value, unless I see a really, truly spectacular uh, development pipeline, I try to switch from names that are fully valued to names that aren't fully valued. That's just sort of what I do. And the junior silver sector, I remember on an interview with you probably a year ago, maybe longer, just saying I'm not making a silver call, but the junior silver stocks are widely, widely, widely reviled. I think I used the phrase coiled spring. And that negative sentiment got erased in a year. I had anticipated that either the silver price would increase, which it hasn't really, it's increased some, or that the silver stocks would claw back from the hate over 3 years. But they clawed back from the hate in 6 or 7 months. The other thing that I've done, the other side of selling, has been I sold mistakes. Chicana was a mistake. Uh, and I think I said fairly broadly, I'm not picking on Chicana, but rather using it as a name to represent a basket of exploration stocks. When you take a decent sized position in an exploration company, your anticipation needs to be failure. You need to believe that the most likely outcome is you're going to lose 25 or 30% of your money, because the reason that you're doing it is you're anticipating a small chance of a stupidly large success. Again, using Chicana as a sort of a teaching lesson, the market capitalization there at the time I got involved was about 6 million Canadian dollars, I think. Had $1.98 in the bank, so all of the money was accorded their inventory of breccia resources, high quality breccia resources on top. But the exploration thesis was interesting to me. They had a very large golden soils anomaly, and it was pretty obvious that there was some energy source, some mineral source for the high grade surface breccias, which was interpreted conveniently as a large porphyry. A group of us put some money in to test both of those theses. And thus far, neither of them has turned out to be true. When the reason that you own a stock goes away, the stock must go away. And so in failed exploration bets, I've sold. Well, to the extent I can. I haven't sold all my Chicana because I have a lot and there's not a very big bid. But certainly across my exploration portfolio, those companies that have failed to demonstrate the thesis or made substantial progress in demonstrating the thesis had to be sold and were.
But you haven't sold anything thematically where you're like, oh, I don't like whatever commodity anymore. I'm going to sell everything out of
No,
that.
I think the commodity that I have the biggest position in that affords me the biggest risk in the near term is probably oil and gas. Um, to the extent that we have a restoration of relationships between Russia and the West, which is to say that there's some resolution of the conflict in the Ukraine, I think that the wind in the sails represented by the hiatus, partial hiatus in Russian natural gas shipments to the West ends. And I think that some of the delta between the North American pricing for BTUs and in particular the European pricing for BTUs goes away. I'm not saying that's going to happen, but it looked like it was, and it was fairly clear sailing in the oil and gas business for a couple of years. The equity prices have not actually kept pace with the increase in cash flows that the companies have enjoyed, and that's been nice. The companies have generated an awful lot of free cash, which the market hasn't noticed. But there are headwinds rather than just tailwinds in the thesis today. There's some improvement in the thesis too. Ironically, because the swing producer in the world really is the United States. And the increase in American production that we've seen as a consequence of a convergence of technologies, but also a very low cost of capital, is beginning to ebb, simply because at today's energy prices, at today's cost of capital, we've done an amazing job of drilling through our tier one locations over the past 5 years. And we're getting to the point where, with the exception of some companies like Exxon, uh, we are beginning to develop uh, a real reduction in tier one locations. Now, understand that there's an interplay between commodity prices, tier one locations, technology, and the cost of capital. If the president manipulates the interest rate lower and reduces the cost of capital, then some of the tier two locations become tier one locations as a simple consequence of the cost of capital. But I would say that the sector where my enthusiasm has been moderated the most, particularly in the speculative side, in the small companies, is in the energy or oil and gas sector.
That's an interesting statement because I want to talk about some of the jurisdictions that I know you're attracted to, like West Africa, once we get to it. And maybe one of these days, sometime early next year, we should do an episode like we did last year on silver stocks, where you, or a year before that, where you rated those silver stocks for me. That was a wonderful episode. Where do I go for gold exposure, though? That's what I'm wondering because I'm looking at the large producers and your Newmonts and Barricks and,
Yep.
and so on. But I'm not impressed at these valuations. You seem to like some of the valuations. Which valuations do you like?
Well, let's start. Most of your listeners own no gold.
Hmm.
So let's start at the top of the exercise. I realize as a young person that you're seduced by buying some stock at 20 cents that's going to go to $2, except it very, very, very seldom happens. So you need to consider the other part of your life, which is to say that part which is very likely to come true over time. In terms of the gold trade, I would start by owning gold. I suspect that most of your listeners save in euro. And saving in euro, except to maintain liquidity, is a fool's errand. Um, Looking at your future in the 10-year term and the 15-year term, which I realize is difficult to do in your 30s, and not saving in gold as opposed to saving in euros is simply foolish. Uh, and I'm not just picking on the euro. Saving in fiat currency denominated savings products is mathematically idiotic. The deterioration in the purchasing power of your currency relative to the interest rate that you receive in fiat denominated instruments was described, I think, by Hayek as a certificate of guaranteed confiscation. So start with gold. And then start with very high quality surrogates, which is to say Franco Nevada, Wheaton Precious, Agnico Eagle. Are those stocks cheap? They are not cheap. At the gold price, which I am afraid that we're going to see, however, they are reasonably priced, which they seldom are. Two, the very high quality companies always yield geological surprises, and those surprises are always good. And I like good as opposed to bad surprises. Those companies have corporate culture that means that their recycle ratio, which is to say the amount of resource that they can add to the balance sheet uh, relative to the margin that they get for selling existing ounces, is very strong. There's a virtuous circle in place that you don't see in the companies one category down. Now, it's much more fun to play at the bottom of the trough in the exploration sector. And I must say that all of the money that I now invest carefully, I made by speculating wildly. But your listeners need to understand that even in retirement, I spend 40 hours a week at that game. Most of your listeners, your age, have lives. You don't, but most of your listeners do have lives. And for them to feed at the bottom of the trough uh, exposes them to more risk than they are willing to ameliorate through work.
For the record,
There's there's no escaping that conclusion. We can talk around it all day long, but there's absolutely no escaping that conclusion. The more work they're willing to do, the further down the trough they can come. But most people, A, want the reward without the risk, and B, they want the reward without the effort. Antonio, I've graded now over 100,000 portfolios in 10 years. And I guess because of that, the information that I have with regards to mistakes that investors and speculators consistently make is very good. It's not grounded in narrative.
mm,
It's grounded in by what is now a very, very, very large statistical sample.
mm. For the record, as I was trying to say, is I agree with you. I don't think I have a life, but my wife is going to listen to this and she's going to be like, see, I told you you don't have a life. We should do something. But I also took her to your conference in Boca Raton this year, so she's got nothing to complain about, which I even think you met her there so you can testify to me actually having a wife because people don't believe me online. Um,
I didn't know if you referred to her as your cameraman or as your wife, but yes, I met her.
what fair and thank you. See, people, I do have a wife. What I'm thinking when it comes down to the gold miners, Rick, is I've kind of started splitting them in two groups. The companies that look to do M&A and buy mines, and the companies that like to build mines. So your Kinross and your B2s. Do you think there's going to be a bigger opportunity in the companies that actually want and are capable, have the staff and the capabilities of building mines? Is that a bigger opportunity?
I think it's an opportunity.
Mm,
I would tell you, and this is very difficult to do, that you need to spend some time talking to the companies and learn to anticipate, at least on a probabilistic basis, how many mistakes they're going to make. Are they going to overpay? Are they going to construct a conservative financial stack that can survive an 18-month hiatus, or more importantly, survive a mistake? Uh, the point that you make is a good one. There is so much money now in passive ETFs that companies can enjoy a larger relative market cap simply becoming larger and more liquid companies. This is as much mining financial markets as it is mining gold. But the truth is that that is a worthwhile endeavor if you have the skills. There are people out there who seem to grow for growth's sake, and that's okay if you're good at it. But the if you're good at it is a very, very important caveat. Uh, Much more intelligent, probably, are the companies like Agnico Eagle that grow strategically. Yes, they do mergers and acquisitions, but the mergers and acquisitions actually bring synergy, not mere size. They are good at constructing mines in northern climates. They understand the politics of Ontario and Quebec. They speak English and French with good affinity. They pay what would appear to be premium prices for deposits that are very proximal to their existing locations so that they take the capital cost out of the acquired projects. Compare that with nameless companies who simply engage in financial engineering with only moderate intelligence, demonstrating mostly leverage to the upside in the gold price, and they believe that their competence extends to three or four continents. In truth, there are some smaller companies that are great mine builders. I'm thinking Bema Gold, building and then selling mines in Nicaragua, building and operating mines in the Philippines, including doing during the Duterte era. Thus far, navigating uh, treacherous shoals, I would suggest, in Mali, operating well in Namibia. There are mid-tier companies that have proven themselves to be capable in the strategy that you're discussing, which is to say buy and build. But you have to be as particular in the buy and build category as you would be in the exploration category. There are people that have a track record of success in that activity, and that have the correct corporate culture to carry on that activity. There are others, I'm afraid, that are merely LSE or TSE or ASX gangsters.
There's plenty of those, especially in the LSE. That's actually a problem in and of itself. West Africa is a very, very interesting place to be right now with all the headline news that we're seeing out there. I think most people are just very, very afraid of it, which would suggest to me that you're liking it. Am I right?
I do like it. I'm afraid of risks that I don't understand. And to that end, I am attempting to arrange for invitations to meet with the current regimes in each of Mali, Niger, and Burkina Faso. I'd like to go see it for myself. I'd like to bring with me a French speaking lawyer so that I understand something about the regulations associated with those regimes. If I'm able to do it, I'd like to talk to the very top of those regimes, perhaps not the army guys, but the mines minister, the finance minister. I hear a lot of narrative about what's happening in West Africa, but I don't understand it enough for myself that I can trust the risks. I still have fairly substantial investments in Mali and Burkina Faso. I have no investments in Niger. So I think what I'd like to do, rather than rely on the popular press, many of whom can't spell the names of the leaders of those countries, nor can I, rather than rely on those journals for my information, I'd like to get my own information. I found this for myself to be hugely useful in Congo, in Namibia, Botswana, and in Sudan, respectively. Hugely, hugely, hugely useful. And so, despite the fact that I'm 71 and retired, I'm looking forward, if afforded the opportunity, to go to those countries and learn more about their political evolution myself.
In my defense, why I'm bringing that up is from for selfish purposes, because I'm trying to emulate what you have done. At least the speculate irresponsibly part of it, I've already been successful in. Now maybe I'll be successful in the other part over time. But I have money invested in Cote d'Ivoire, which is guilty by association. It is not the West Africa that people think it is, but it is guilty by association. Yet we see the Lundines going in there with Montage and just a lot of money going into those jurisdictions that are guilty by association. Your Cote d'Ivoire, Guinea, your
Sierra
Ghana,
Leone.
Liberia, and so on and so forth. So what do you make
I,
of those?
I spent a fair bit of time with the delegation, the small delegation from Cote d'Ivoire and Sierra Leone at PDAC last year.
Hmm.
And I found their expectations of Western countries to be entirely reasonable. Now, those are traumatized societies. You might not be old enough to remember the civil war in Cote d'Ivoire. I am. I mean, I wasn't there physically to see it, but I was aware of the challenges that the industry was facing because the challenges that the citizenry were facing. And so those are traumatized societies. What that means is that a company like Montage, that's backed by a group like the Lundines, who has 50 or 60 years of experience fashioning consensus with locals, not just the federal government of those countries, is what you need. You need the headmen in those villages to understand that the village's future and their own future is tied very closely to the company, where the company isn't viewed as the enemy, but rather is viewed as the key to improving the lives for future generations. You've chosen wisely if you've invested, I would say, in Montage, as opposed to invested in some group of Toronto sharks that has, made a deal with a local cacique for a bunch of paper and is promoting a golden tills anomaly with no commitment to improving lives in the community. But I would say broadly that much of West Africa is, as you say, tainted by association. Each of Liberia, Sierra Leone, the Ivory Coast, Guinea has a legacy of historical challenges, and a lot of those challenges remain. It seems to me, however, that the trajectory of those companies or countries, pardon me, is positive. I'm not so sure about Mali and Niger. We'll see. That's why I want to go there. You know, is it my perception? Is it my prejudice? Is it because Mali was so good and now it's not quite so good? And rather than relying on some journalist who may not have been there, or a company who may actually be guilty of past sins, I don't know. I'd like to go find out for myself.
I hope we have time to talk about uranium, which might bring us back to Niger potentially. What do you think if we jump from here all the way back to the US where you're at right now? What do you think with the new president going into 2025? Is the country going to open up for more? Are we going to see better permits, quicker permitting processes, community relations, and so on and so forth?
No. Uh, Remember that permitting in the United States is a three-part process: federal, state, and local. What you will see a real improvement on is the de facto, non-judicial federal impediment to permitting. The Biden administration never had a policy in writing that said we will not approve new natural gas liquefaction facilities, but they had the policy anyway. That's gone. So the tie-up, the restrictions that you'll see at the federal level, as an example, in interstate oil and gas transmission or gas liquefaction, those will be gone. The extrajudicial imposition of federal power in things like access to the copper deposits in the far north of Alaska, that's gone. The ability that Mr. Trump has to circumvent the legal process around mine permitting at a local level, as an example, around the Resolution deposit in Arizona, probably won't be affected. I would suspect that regions in the United States where there's state and local support for mining, there are four: Texas, Wyoming, Nevada, and Alaska, will benefit. Other states, California, no go, just no go. Arizona, unless you're on private land, no go. Idaho's going to be tough, stuck in the middle. Montana's going to be very, very tough. Stuck in the middle would be generous. Uh, in You halfway broached it. The uranium business, I think, is going to be very good in the United States because you have a federal government that's gone from vilifying the industry to subsidizing it. Mm-hmm. Now, frankly, I felt cleaner when I was hated than when I was subsidized, but that's a different discussion. The domestic uranium industry is centered in Texas, great state, and Wyoming, great state. So in those circumstances, you have the tailwind of public support, you have the tailwind of federal government support, and you have the tailwind of local support. That's pretty good. What you don't have in the United States, unfortunately, in the uranium business, is any world-class deposits. You have deposits that are important to the United States and deposits that will likely be aided because Trump will likely steal from the taxpayers to subsidize the uranium industry. So, I guess you take what you can get.
Again, we'll get to uranium, hopefully, and we'll touch upon these things later on. What is the highest, well, in your case, actually, the lowest, let's call it the best, what's the best rated precious metals or gold specifically stock that you have right now?
No comment. I understand that gets you a lot of views. Rick's top favorite, top gold pick, but I don't do that anymore. If I had to do it, I'd probably say Franklin, Nevada, the highest quality, most boring one,
Hmm.
because for most people, they can't stomach risk and they're not willing to do the work, and so I try to de-risk the pick for them. But the other problem with that, frankly, is that when your viewers see this video a year from now, they assume that nothing's changed. And a pick is a snapshot in time. I've, because I'm hardwired or predisposed to please people, I do that from time to time. And I've done a lot of damage because I haven't properly caveated the pick. And even if I do properly caveat the pick, when people hear the presentation, they don't risk adjust the presentation and they don't understand that the presentation is itself a snapshot in time, which it is.
Hmm. I think what gets a lot of views is when you tell people that gold is going to $9,000. I've seen a couple of those thumbnails, and that does get a lot of clicks. Uh, are we where I'm going with this? Why I'm asking about the highest rated stock is because I'm thinking about again producers, developers, explorers, and specifically
Yep.
thinking about are we ever going to see a structural bull run in juniors again? One that really takes your face off across the board instead of on individual stocks.
Sadly, yes, because it will take people's face off. Uh, what will happen is that the juniors will triple, and after they've tripled, the great unwashed will move into the space, and it will take their faces off. Even those who got in early and enjoyed the triple will hang on too late, and they'll round trip it. As I say, I have now I've created over 100,000 portfolios, and sometimes I contact the owner of those portfolios to sort of understand the way they think. And Antonio, I can't tell you how many portfolios I've graded that have 50 or 60 names in them.
Wow.
And so let's construct a fake company. The first one on the list, Amalgamated Aardvark. And let's say that you own Amalgamated Aardvark. And I say, Antonio, why do you own Amalgamated Aardvark? Well, I own it because Bob Bishop recommended it. I see, Antonio. Do you know that Bob Bishop has been out of the business for 12 years? You think anything might have changed in 12 years? Oh, well, I can't sell it. Well, why can't you sell it, Antonio? Well, I can't sell it because I bought it for $1.40 and it's now at 30 cents. And if I sold it, I'd lose $1.10. And then I need to say very patiently, no, you've already lost $1.10. The question is, what do you do with the remaining money? You
Hmm.
follow where I'm going with this?
Yeah.
Uh, for people who want to participate in a rip your face off rally in the juniors, first of all, they need to understand that it might occur 3 years from now or 4 years from now. Which is to say, by the time the rally occurs, if you chose stocks poorly, you will already have lost 70% of your money. And the rip your face off rally will only get you back to break even. The second is that these rallies are extremely seductive. And when the rally occurs, it will enforce the paradigm that you believed as a consequence of your narrative, and you won't sell. uh, I've watched this happen. I'm laughing about it. It's actually tragic. I've watched this happen for 40 or 45 years. I've watched investors' laziness and investors' greed uh, destroy truly massive amounts of wealth in 40 years. Uh, I would ask people rather than relying on a quote, rip your face off rally, which will rip your face off, not in the way that you had intended, to focus on high quality companies where the probability is that you will do well, and they could be juniors, where this quote, rip your face off rally is icing on the cake rather than the whole cake.
Hmm. Well,
Antonio, I've said this on your show before. I want to say it again, though. If you merged every junior company in the world into one company called Junior Explorco, all 3,000 public companies worldwide into one company, that company in a very good year would only lose $2 billion. In a bad year, that company would lose $8 or $10 billion. So how much would you want to pay for this company, Junior Explorer Co? What what enterprise value is appropriate for losing $2 billion a year? Do you want to price it at a cheap 6 times losses? Are you going to be more generous in anticipation of a bull market and price it at 10 times losses?
Mm.
Because at the top of a bull market, you will certainly price it at 15 or 16 times losses, and you will get what you deserve as a consequence of that.
Looking at the higher names that you've suggested, or that you suggested now, like Franco Nevada, for example, or we have Wheaton Precious Metals, even Royal Gold, if you will. I don't know that you've suggested that one, but that's a royalty company. I know you like the royalties. They have been not even a beta really for the gold price. I mean, gold's up 30%, Franco's up 15 this year. Wheaton is up
You make
25 and Royal's up 21.
you make a
Um,
wonderful point. And what you learn is that when you achieve beta over the course of a market cycle, the beta in the gold space is huge. You don't get gold bull markets often, but when you do, the rewards in a concentrated period of time are superb. Ironically, when the gold price does well, it benefits the marginal companies more than it benefits the great companies.
mhm.
What I've learned is if I can expect 250 or 300% beta over 3 or 4 years in a gold bull market, but I don't know when that gold bull market's going to start, I'm better off giving up a little bit of my beta by de-risking my portfolio in an operational sense. In other words, rather than experiencing 325% over 4 years, I experience 275%, but I remove 75 or 80% of the operational risk by doing so. You follow where I'm going? If the beta that I'm looking at is so gigantic, which in the course of my 50 years in the business it has been, the idea that I underperform the market a little bit by taking away most of the risk seems to me to be a very good trade. And I also want to say, and I will give you a couple names. You don't have to be in the Francos and the Agnicos if you're willing to do the work. There are some extremely high quality juniors. I'm thinking about names like Entree Resources, where Rio Tinto's coming right at them, underground at Oyo Tolgoi. Origin Resources, where you have a royalty on the silica cap deposit. Kennerland Resources, one of the best practitioners of prospect generation model, uh, headed by somebody your generation as opposed to my generation. There are some very high quality juniors. There are other juniors that, if you can take the risk, control tier one deposits in out of favor sectors. These are companies that expose you over 5 years to legitimate 10 to 1 returns. Um, so sovereign resources would probably be an example of that. Meteoric resources would probably be an example of that. You need to be willing to take absolute risk, and you need to understand that most legitimate 10 baggers require 5 years. That's what the requirement is. Most legitimate junior 10 baggers experience 15 or 20% volatility the same way that you and I experience breakfast, lunch, and dinner, the same way that we breathe. They aren't indicative of anything. But investors who don't understand the thesis, who don't understand the basics, get freaked out by a 15% share price decline, or they get elated by a 20% share price increase, pardon me, when both of them are irrelevant. They're both inhaling and exhaling. So, to the extent that your audience cares about the juniors, and clearly they do, they need to understand how the industry works. I'm not saying to avoid them. I'm saying that the number of juniors in your portfolio should correspond with the number of hours per month that you're willing to spend studying them.
If you're not willing to do the time, don't do the crime, with the crime being
Correct.
speculating in junior mining. Rick, uranium didn't do as well this year as you and I might have expected or have talked about in previous
Yeah.
conversations. What do you think went wrong? What's the outlook there? Is the bull market over? How are you positioning?
Nothing went wrong.
Hmm.
People had stupid expectations. And the consequence of that is that there was a class of speculator that owned the narrative they were right, and they lost patience. It's really, truly silly. I mean, the uranium business, the fundamentals in the uranium business get better and better and better and better and better. And the people around the story have invested in a 5-year narrative, and they have a 3-month strategy. I mean, those people get exactly what they have coming, which is to say nothing. Uh, the structure of the uranium business is in great shape. For the first time in my life, we have the tailwind of public support. I mean, you have the head of Greenpeace saying the only hope we have for continued prosperity with a nice environment, this is Greenpeace, is uranium. Uh, we have a U.S. administration that's gone from trying to make it a felony to subsidizing it. We have Japan yesterday with the largest shutdown of nuclear capacity in the world, saying Japan's energy future includes uranium. There's nothing like Japanese restarts to impact demand tomorrow as opposed to 7 or 8 years from now.
Hmm.
We're building nuclear plants worldwide. We're having very, very high quality counterparties like Microsoft say to the nuclear power industry, we will finance your restart. And if we can get access to 24/7 power, we will buy that power at double the prevailing power rates. At the same time, the structure of the industry is going from the tyranny of the spot price to the stability of the contract price. And when I say this to audiences, people who are new to uranium, their eyes glaze over and say, when will the share prices go up? You know, there's really no helping people who are that stupid.
That would have been my next question, by the way. So, where do you think the next leg of excitement might come from? And let me tell you where I'm coming from with that question, because in my experience, studying some of the past bull cycles, there's really three reasons why major bull cycles within the equity start. One of those is the entry of retail money, generalist money into a specific topic. The
Yep.
other one is billionaire money. So, your good friend Eric Sprott almost single-handedly saved the junior market in gold and silver in 2016 with by deploying a whole lot of more than $1 billion
Right.
of capital, or big M&A, your Exxons or whoever entering and buying a uranium deposit or something like that. Which one of those things is probable to happen with uranium? Because I have a hard time
I
wrapping
think
my
I
head
think
around that.
I think you forgot one,
Okay.
which is reality.
Hmm.
When the increase in the uranium price and the ability of companies to utilize the term market to finance projects that they otherwise wouldn't have been able to finance. And when the stability of margins in the bigger companies gets established, that's when the generalist money comes in the space, when the industry legitimizes itself with performance. The billionaires are there, Antonio. I've spent a lot of my life talking to very large family offices. And I'll talk to very large family offices today, although I'm retired about various topics. And rather than me steering them to resources, they're steering me to resources. Saying, okay, Rick, we get the theme. We're here because we care about uranium, or we're here because we heard you say that the market share of precious metals and precious metals related securities is 0.5%, while the 4-decade mean is 2%. And we are right exactly there. We understand the mistake and we want you to help us fix it. The billionaires are in place. I mean, really, truly, the billionaires are in place.
Hmm. What part of the market do you then expect to perform well in that situation? Because I'm thinking, do you just go and be contrarian on everything that's fallen? But in uranium, the cost of capital is with most of these companies very high because almost nobody, none of these companies really have revenue to begin with, let alone free cash flow to finance any type of investment. So where do I go? Developers, explorers, producers, royalties. There's crypto coins now that do uranium too. So where do I go?
I, I, I think, well, the crypto coins, you have to ask yourself if they have any uranium. Rather than being backed by uranium, they're denominated in uranium. Um, that's a scam. Okay, let's get that straight. That's a promise to pay. If you don't understand their balance sheet, if you don't understand their ability to pay you, they can't pay you. So let's get that one out of the way. I really think that rather than trying to understand the industry from a one size fits all perspective, that you need to go back and take a look at yourself. What's your time frame? How much risk are you willing to assume? And how hard are you willing to work? For me, the for me, Rick Rule, as an investor, not Rick Rule in Rule Investment Media or anything like that. For me, the upside is looking at deposits that the market thinks can't be financed and trying to analyze the issuer's ability to forward sell in the contract market enough material with an investment grade counterparty that they can get the deposit financed. George Soros said he made his billions by finding a widely held public perception that was wrong and betting against it. There is a widely held public perception right now that a lot of these junior projects are not financeable. And for 10 or 12 projects, that's wrong. Now, only half the projects are large enough to interest me, which means that there are 5 or 6 projects worldwide that the industry doesn't think, or not the industry, pardon me, but the investing public, including institutional investors, don't think are financeable. I think they are financeable. Owning those and then being proved right is an awful lot of fun. I've had it happen to myself a few times in my career. And what happens is, even if they don't finance them, even if they're taken over, there's dynamic tension in the process. Everybody now is looking for takeovers, but everybody believes that these projects couldn't be built by the issuers themselves. And so they look out and they see who could take them over. Well, Cameco, if they're in Canada, maybe Rio, maybe BHP. But the truth is, if Cameco, Rio, and BHP believe that they're the only bidders, they're going to be constrained in terms of the price they pay. If the company then announces that they've secured the financing for the project and they don't need Cameco or Rio or BHP, but Cameco, Rio, or BHP, just as an example, want that project, then they have to pay up for it. You don't have an auction if you only have one bidder, right? But we're coming into a circumstance in the uranium business where the management teams, whether or not they should, are going to be able to finance these projects. They're going to be able to go to Westinghouse, which is now part of Cameco, and say, we would like you to build this project on a turnkey basis. We will pay you too much to build the project, but we want to guarantee that you bring this project in on time, on budget, or else you pay. They're then able to take that contract to investment grade counterparties, Ontario Power, Southern Company, Duke Power, China General Nuclear, Tokyo Power, and say, you see, we're guaranteed that this project is going to be built on time, on budget. So we are going to be able to guarantee you product beginning in 2028. And we'd like to enter into a long-term contract that specifies within ranges the amount of material that we can sell you and the price that we're able to sell it to you at. This doesn't occur in any other commodity in the world. There's an arbitrage in place now in uranium between the cost of capital and the return on capital employed that's off market.
Hmm.
And nobody, I mean, the fact that it took me 5 minutes to explain it says that the narrative isn't going to enjoy widespread circulation. When a lot of people at conferences hear this explanation, their eyes glaze over and say, so when are the stocks going to go up?
Well,
Those people, I'm afraid, are my natural and normal victims. I'm, sort of a pawnbroker uh, to people who employ a long-term narrative with short-term strategies.
hmm. Well, now I know better that that's not going to be my next question as to when the stocks are going to move. But why do I have a feeling you're not going to tell me which those 5 or 6 projects are?
Well, I mean, people can figure them out for themselves, but it seems to be, and I'm not saying NextGen's a great start. I don't understand why sponsoring Formula One racing lowers your cost of capital in Saskatchewan. That's a different question. But I think the NextGen deposit is a deposit that the industry believes couldn't be financed by NextGen. It may not be, but it could be. Fission can easily be financed by fission. As an example, understand I want 100 million pound plus deposits. I'm not interested in 20 million pound deposits.
Mhm.
But I think the production hub in South Texas that UEC has can be financed without an industry big brother. I believe that the production hub that they have in Wyoming, not that they're great deposits, but the industry doesn't perceive that they're financeable. And I believe that they are financeable. Uh, to the extent that the Australians would remove the vestiges of the three mine policy in Australia, there's a couple deposits in Australia that would be able to be financed. And I think that the deposits in Africa, probably, uh, that might be a little riskier because you would need to add in a point and a half, 150 basis points in political risk insurance to your cost of capital to build deposits in Botswana, Namibia, uh, Tanzania, never mind Niger. But those deposits, I think, could all be financed by the juniors. Whether they will be or not is a very different circumstance. But I don't think that there's one uranium adherent in 100 that understands how the structure of the uranium market has changed and why that's profound.
Do you think, while I understand, Rick, that those deposits are financed by your next gen, your Arrow, obviously, and I understand your argument on UEC stuff in Texas. Do you think the managements of those companies actually want those financed and built, or is it kind of easier running a supposed development company in the meantime?
I think in the case of South Texas and Wyoming, which is to say, in the case of UEC, the shareholders of UEC have asked Amir not to hedge. They've asked him to give them unbridled upside to the uranium price. They've asked him to deliver optionality as opposed to solvency. I'm an old man. I would prefer solvency. So, to the extent that Amir was able to pledge 60% of the material and get them built without financial downside and maintain his optionality on 30 or 40% of the material, that's probably the right that's probably the right juxtaposition. Make no mistake. This guy Amir is at least a Ross Beatty, but perhaps a Robert Friedland in the making. Deadly serious, very smart. Does he run too high an overhead? Yes. Uh, but he's a league apart as a financier relative to the rest of his generation. And if the subtext of the question is, uh, does he enjoy capital markets activity irrespective of what the right way to finance the project is? No. Amir is looking to build a $3 billion or $4 billion or $5 billion family fortune. And you don't get that by jitney in stocks from $3 to 340.
What do you think makes a good financier? That actually might be a podcast in and of itself, but you call him a league of his own. What do you think makes a good mining or junior mining financier?
They need to be uh, they need to be very smart, first of all, but they need to be persistent and tenacious too. Amir has now been in the uranium business for 25 years, despite the fact that he's a young man. Now he's been paid. He's paid himself well. Well, he hasn't sold stock. He's certainly monetized options, but he stuck with it for 25 years. Most people seem to have problems, pardon me, maintaining focus over a long weekend. And that isn't the case. They need to have the ability to form a team that has a very clear focus, a shared focus on the vision. And that they need to put people in place whose skill sets are reflected at the task at hand. And they themselves need to be the arbiter of the disputes. What I used to love about Lucas Lundin is he'd bring everybody that he thought had a contribution to make about some problem in some company he was trying to solve. And he would ask questions and provoke disputes for an hour or 2 hours or 3 hours. And then he would say, literally pound the table and say, okay, now we're going to decide. We could spend a week talking about things we don't understand, and we don't have a week. We're going to decide right now, and if we make a mistake, we're going to fix it. A leader needs to do that. Lucas Lundin actually had a chair in his office that had the inscription, the decider. And you need somebody who can forge group consensus and at the same time is a good enough leader that the people who disagreed with the consensus still feel like they're part of the team, because these teams have to be fairly small. So you need a real leader. Ross Beatty is a leader. Bob Quartermain's a leader. Robert Friedland is a leader. Lucas Lundin was a leader. Amir Adnani is a leader. You need somebody with whom the buck stops. Bob Quartermain is an example. I got a call years ago after we'd been helpful in the success of Silver Standard from a woman who answered the phone there, a low-level clerical person. And Bob Quartermain had made sure that everybody in the organization got stock options. Everybody. The woman who answered the phone made enough money on her stock options that she was able to afford the down payment on a condo in Port Moody. And she wanted to thank me for being part of the success that enabled her to become a homeowner when she thought that that was out of her reach for the rest of her life. That's a leader. He didn't hoard all those options for himself, which he could have done. He made sure that everybody in the organization participated in the success. And if there were people in the organization who weren't participating in the success, he had the balls to fire them.
That's really a podcast in and of itself. And sadly, looking at my clock, it is.
Yeah, I have to be smart in 1 minute on another podcast, and it takes me longer than that at this age. Antonio.
What do you have coming up? What are you working on right now? What's 2025 going to be?
Let's go with the main line. The cheapest way to access me is to submit your portfolio for review. Go to ruleinvestmentmedia.com, list your natural resource stocks. I'll rank them 1 to 10 for free, no obligation. If you care about gold, we're doing a gold boot camp coming up in January. These are 8-hour-long deep dives. Absolute money back guarantee. If you don't think you got your money's worth, we'll give you your money back. Don't come if you're a tourist. This is 8 hours about gold, and we're going to give you more information than you could absorb in 8 hours. So you're going to have to replay the recordings a couple times. But if you're serious about gold, if you're not a tourist, if you can spell gold, you absolutely will benefit from it. And if you don't benefit, if you work hard, I'll give you your money back. Money back guarantee.
Thank you so much.
We'll give you a link to post with this, Antonio. And I'd love to see your people there. I'd love to see you there.
Thank you. Thank you so much for your time. I'm going to put it up on the screen so people can see it and hopefully speak soon.
Thank you, sir.